We just have a quick question here, or follow-up question rather, from Stuart, in a question from yesterday, asking how we can better prepare for unscheduled news events, or whether there's a way to better categorize them in terms of potential impact, compared to something like scheduled ones. Now, thanks for the question, Stuart. I think the first thing to note about unscheduled news is that obviously it does catch a lot of people off guard because it is unscheduled. So, being unannounced and unscheduled means that you need to make a decision on whether it will move the markets up or down in a few split seconds, as the news breaks. Now, just preparing, just like preparing for scheduled events, we can actually prepare, or categorize unscheduled events in the same way by looking at them through the lens of the same criteria that we use for scheduled events. The first thing we need to always do to prepare ourselves for unscheduled events is always know what the major global macro themes are that the markets are focusing on right now. So, for example, back in 2016, it was, of course, Brexit and the Brexit referendum. In 2018 and 2019, it was the Trump administration and the trade war with China. In 2020, of course, it's COVID-19. So this type of question should always be our main focus as a trader. And to try and sift through the noise, we always need to make sure that we're putting our energy into the themes that the markets are really caring about right now. The second thing we need to do to prepare ourselves for the unscheduled events is always knowing what the other underlying drivers in the markets might be. So every day inside our daily risk event outlook report, for example, we go through the key macro themes, if you want to call it that, that the markets are currently focusing on. And it's not always going to be these themes obviously change. As we said in 2016, 18, 19, 20, there's always going to be something else, the major theme that the market is focused on. But we always need to keep the underlying themes in mind as well. So, again, going back to where we are now in June 2020, we know the major market focus is COVID-19 and the recovery of the economies. But the underlying themes right now are still very much present, and that is things like Brexit, the US-China tensions, China-Australia tensions, the EU Recovery Fund. All these themes they're not the major drivers, but they are still in the back of the market's minds, which means that we need to be prepared for if and when we see new developments hitting the wires regarding these themes. You see, the best way to react to unscheduled news is actually not to react to them at all. And what I mean by that is, you have when you have sentiment shifts, you want to essentially be able to react as fast as possible by already having an idea of how the market should be viewing certain developments that hit the wires regarding certain events. So if we take Brexit, for example, if we suddenly get an announcement saying that the UK have decided that they're not going to step up negotiations with the EU, they're rather just going to drag it out and not really looking to get involved in too high negotiations, and they will take a no deal if it comes to that. Obviously, that type of announcement is going to be a major negative for the pound, and definitely something that you can just jump in and act on. But of course, you need to be prepared for that. And not react to it. You need to basically already know in your mind how you will react when you have positive and negative data. So professional traders are usually taking profit on these types of moves only when the rest of the market is starting to get into these trades. And the way that they're able to do that, apart from algo trading and stuff like that, of course, is by already knowing how they will react if and when something happens regarding these underlying themes. So, for example, I have a screen on my PC that has 8 key instruments displayed. For example, currently I have the euro US dollar on one of the screens, or on one of the blocks for any type of recovery fund news. Then I have the pound versus the dollar for any type of Brexit related news. Then I have the Aussie yen, the Aussie US dollar, and the S&P 500 for any type of virus news, second wave virus news, stimulus news, recovery news, etc. Just to give you an idea. So ideally, when we see anything significant happen on any of the major themes, you can basically just reach over and jump into the market, knowing exactly how you're going to trade it. Now, the next question that traders often ask on this is, with all the news hitting the wires, how do you know which ones will be market moving and which ones will be important or not? And again, it comes back to the themes, right? So like yesterday's ECB liquidity vehicle comment that you mentioned, on its own, that wasn't going to be a major big deal. But because the one thing, or one of the key themes right now that the markets are focused on, is central bank and government stimulus. We knew that that'll feed into the recovery hopes narrative, right? So that fed into that narrative, and we know that that narrative is something that the markets are focused on right now. And we mentioned that this isn't certainly going to change everything. It's not going to change everything, but it will be important from a short-term point of view, being able to move the markets. And by knowing where the data feeds into the bigger picture, we can better adjust our expectations for these types of events. Now, this skill isn't something that's going to come overnight. It will take time to build. It's not something that will develop by itself either. It is something that you need to practice. By watching the news and watching the subsequent market reactions that follow. And whenever you don't understand how the market reacted, to ask a Q&A. So you see that you thought that the market would have done ABC, but it actually did the exact opposite. Can you explain why? Those type of things will help you to better understand how the market views certain data points. Now, on that note, there is nothing wrong with sticking to just scheduled events as a start, right? At least with scheduled events, you know when they are coming up. So you can build various possible scenarios in your head on how you can trade something before it happens. Many new traders will quickly check the calendar, on a day. They'll quickly open up the calendar and see, okay, they'll say, okay, we have NFP coming up, and they'll just quickly open the chart and try to catch a few possible pips. But oftentimes they'll just lose money doing it that way, because they're again trying to react to the news instead of proactively building out possible scenarios ahead of time. So, for example, what would the market consider a really substantial beat or substantial miss? And how will various asset classes react towards that news? That is something that's often overlooked by traders. And let's take something like economic data. Say you have a very, very high, let's say, the central bank, right? And they've been hawkish for a very long time. And imagine that they've been hiking rates for a couple. They've hiked rates a couple of times. Now, if we suddenly get a much higher than anticipated inflation print, let's say it's for the dollar or for the US. Now, that might be positive for the dollar, because that would lead to, or possibly point to, further tighter monetary policy. But that won't necessarily be a good thing for the stock market if they think that rates are going to go higher to a point where it will actually hurt business performance. So then buying something like the USD yen, for example, would be a very bad idea, because the yen should strengthen if equities should drop on the back of that news. So then trading something like the Aussie dollar lower would be a better option. But these type of scenarios, are not the ones we build as the event comes out. They are the pre-planned scenarios we build before the event takes place, so that we know, okay, if ABC happens, I'm going to trade it this way, or if that happens, I'm going to trade it that way. So in the same sense, we can try and prepare for unscheduled events, but of course, you're more limited by it, because you can't and won't know exactly how and what will happen in advance. But doing always focusing on those main macro themes, and always having a few possible scenarios of how you think you can trade that, will be a good way to start on getting to grips with some of these more unscheduled news events. So I hope that helps you. Any further questions, don't hesitate to let us know.